Hello, everyone, and welcome to our last of the 5 year ahead webinars. If you could put a quick Y in the Q&A just to let us know that we're coming through loud and clear, that would be great. So far, we have covered equities, crypto, international views, and themes as well. But now we wrap all of that into one plus more. And we have the panel of dreams for you today with eToro's very own CEO and co-founder, Yoni Assia, joined by Gil Shapira and Ben Laidler. Today, we will discuss a vast array of topics, such as positive outcomes for next year, negative risks for the markets as well, and how to invest in a reopening and reflationary world. We'll discuss the 2021 winners and whether that can continue into next year, as well as looking at the 2021 losers and can they turn it around as we enter 2022. We'll also have time for a Q&A, so please do populate the chat so I can put our panel on the spot so they can answer some of your questions. So please do that throughout. We've also got a couple of polls, 3 polls actually today. So please do make sure you have a vote. Before I introduce our speakers, I just want to run through the disclaimer. Now, I know you can see this all on your webpage, and if you've joined all of these webinars before, you'd have heard it. But here at eToro, we absolutely believe in free education, and we want to put on as many webinars for you guys as possible, as you've seen throughout this sort of last few weeks and on the eToro Academy. But this is a marketing communication and should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. The material has been prepared without taking into account any particular recipient's investment objectives or financial situation and has not been prepared in accordance with the legal and regulatory requirements to promote independent research. So I'm just going to leave that up there for a moment for you guys. I know you can all see this, and hopefully you've enjoyed these webinars so far. I know I have, and I'm absolutely excited, ecstatic for today's one. So for our speakers speaking today, and I feel a little bit like Bruce Buffer, the MC for all the top heavyweight boxing matches, about to introduce the main event. But let's go through our top billing. First up, we have Yoni Assia, who is the CEO of eToro, who of course co-founded the company in 2007 with the vision of opening the global market so that everyone can trade and invest in a simple and transparent way. Yoni is a member of the YPO and was included by Financial News in its FinTech 40 ranking and their Rising Stars in Asset Management ranking. He was also listed in Fortune's 40 Under 40 and in City AM's FinTech 100 Top Influencers. Most impressively for me, though, is if you've gone to his Twitter account and looked at his pinned tweet, you can see where he was buying Bitcoin from in single figures, which is just incredible to think back. I think that tweet was only 10 years ago, 2011. Ben Laidler, who has over 25 years global investment research experience, having held roles as global equity strategist, global head of sector research, and head of Americas research at HSBC in New York. Prior to coming to eToro, he was CEO of an independent research firm, Tower Hudson in London, and has held roles at JP Morgan, UBS, and Rothschild. We've also got Gil Shapira, who has been the chief investment officer here at eToro since 2019. Gil started his career in the financial services back in 2002, and between 2012 and 2019, before coming to eToro, he was the CEO of an Israeli ETF company where they were offering dozens of ETFs of global indexes, both for retail and institutional investors. Guys, how are we doing?
Perfect.
Super. Thank you for being with us today.
Awesome. Fantastic. Well, we'll without further ado, we will get on to the poll shortly. You can see, guys at home, all on your screen right now, just what we're going to cover again as we go through the list. And I'm just going to highlight this all for you. So it should pop up on your screen now and make a sound. I can see you have all been populating the Q&A, which is great. Continue to do that because I'll be making a note of your questions for later on. Anyway, first poll to really kick us off here, and you've got a couple of minutes to answer this. But the first question is, what do you see as the main upsides for 2022? So we've just started December, but for next year, what are you focusing on back at home? The sort of the positives for next year. First answer you could go for technology and crypto adoption accelerating, so seeing a continuation of that. Are you focusing on lower for longer interest rates? The end of COVID-19. I mean, that would be fantastic, wouldn't it? Earnings to continue to surprise. Obviously, we've just had a good earnings report for quarter 3, earnings there. Or is your answer further rise of the retail investor? So please do have a vote on that. I'm just going to highlight that again for you at home. If for whatever reason there is something else that you're focusing on for 2022, put that in the Q&A. You know, I always find whenever we do the webinars here at etoro, the community is incredible. People answering each other's questions, bouncing ideas off each other as well. So please do have a vote or put your opinion into the Q&A as well. I'll leave that up there for another 20 seconds or so. Just having a quick look through the Q&A. Let us know where you're logging in from as well. I always find it fascinating to see how far the reach is for our listeners. Okay, results time. The results are in, and the winner, wow, by a long way, 68% win there for technology and crypto adoption. 68%, wow. 4.6% lower for longer interest rates. So maybe we're thinking about rates starting to rise here. Yoni, I guess this kind of brings us on to your section here. What do you think about these sort of the upsides for 2022? And yeah, what are your thoughts on the poll as well?
So first of all, it's great to see our audience and customers at etoro and their view of technology and crypto adoption accelerating. We've definitely seen over the last 2 years an acceleration of not only crypto and technology adoption, but that connection from the technology adoption to the valuation of tech stocks and the importance of tech stocks both for institutional investors and more importantly for retail investors. Since March 2020, we saw an inflection point in the rise of retail investors all around the world. We've grown from the end of 2019 from about 12 million registered users to more than 24 million registered users. It took us more than 10 years to reach the first 12 and then less than 2 years to reach another 12. And that's really because of the increased customer demand and interest in what's happening in capital markets, which is truly all of the above of all of the reasons you suggested here. I've been a fan of capital markets since I was very young. I started trading when I was 13. And the only things I always feel a bit sorry about is selling too early, whether it's my Apple or my Amazon or some of my Bitcoins. What we see in technology and crypto, I would say, is a part of that, or even a bigger part of that, is the translation of the entire financial services industry into a new digital era, is that the future is quite certain. So it's quite certain that technology is going to take a bigger part of our lives. It's quite certain that digital transformation is going to completely transform financial services, and that blockchain assets, blockchain technology, crypto, the ability to trade 24/7, all financial instruments from all around the world with a much better, simple user interface, it's a certain future. So the question is, how do we get from where we are today at 2021 to 2030? Now, when we talk about 22, my view is always, and this is why I hire great people as well to talk about shorter timeframes. I always like to look at the horizon at 2030. I think that technology is going to keep accelerating. Crypto is probably going to grow from what today is $2.5 trillion market cap to $200 trillion market cap. And those opportunities are what you would call white swans, right? So if you'll go to a swan lake, you'd see mostly white swans. Everybody usually are very afraid, and rightfully in some cases, about black swans. But actually, white swans are the ones usually dancing around in the lake. And the white swans are, we know that the stock markets now in general have been going up and generating returns over the last 50 years. If you think about value investing or Warren Buffett, we know that technology has been accelerating. If you look at the performance of the FANGs over the last couple of years, generating 300, 400% returns, and that potentially will continue. And we understand that crypto is still in its infancy at $2 trillion when we look at 2030. So it's all about how can you ride those white swans and make sure that you're prepared to the potential downside risk of a black swan, remembering that the worst thing a retail investor can do is not be prepared for a correction or downside panic and sell all of his stocks like we've seen historically before. Those who survived crypto winter have done very well, as well as those who have survived the dot-com bubble and kept holding their Apple shares for another 20 years.
Yeah, I actually saw a tweet the other day of the returns of Apple and Amazon since the beginning of the millennium, and I think it was 111,000% higher since then. So yeah, absolutely great point. Talking of white swans and black swans, I guess this brings us on to our next poll here for the audience. So please, again, guys, do make sure you have a vote. Again, I'm just going to highlight that at home for you. It should all pop up on your screen. So let's go for this question here. What downside risks are you worried about the most for 2022? So first option for you to all consider here is higher inflation leading to faster rate hikes than we're expecting right now. The next option is further and worse COVID variant. The third, new geopolitical risks. And fourth, a spike in oil prices to over $100 per barrel. So just to go over those again, higher inflation leading to faster rate hikes, further and worse COVID variants, new geopolitical risks, and a spike in oil prices to over $100 per barrel. And same thing again, if there is something else that you think is going to affect markets, put it in the Q&A, because it might be something worthwhile us considering as well. But I'll leave that up there again for another sort of 30 minutes or 30 seconds or so. 30 minutes would be here all day. But yeah, let me know what you guys are thinking. I can see some questions have already gone through into the Q&A, which is great. So I'll be taking a note of some of those as well. Question in the chat earlier, where can I get a t-shirt like Yoni? Yeah, everyone wants one of those. I'm sure we can sort something out. Okay, results are in. Drum roll, please. And the winner of this poll, higher inflation leading to faster rate hikes. About 50% of our audience thinking that. 2.6% are worried about oil if it was to go to $100. New geopolitical risks, 25%, and we could call further and worse COVID variants in that bracket as well. So a clear winner here. Gil, I guess this brings us on to your section, and considering we've talked about the white swans, I guess now could be time to talk about the black swans and those potential downside risks.
Yeah, certainly. So first, black swan. One black swan could be a new kind of variant that can be resilient to current vaccines. But we don't want to gather, and as we are not pandemic experts, we will leave it aside for a second, and maybe to talk about what we see here. 50% of the people answered that they are worried because of the inflation, and maybe to be more accurate, the risky and maybe uncommon combination of high inflation with slowing growth. Why did I say uncommon combination? Because usually growth and inflation are correlated, because think about it, whenever economic situation is getting better, so companies earn more money, employees get a raise or find a new job, so they have more money to spend, they consume more.
I think he was hinting at something.
And then inflation is up. But high inflation is a bit tricky and maybe risky for the economy. So that's why central banks are doing. They tend to increase the interest rate. That way, loans are more expensive, bonds are more attractive, so people consume less, inflation is going back down. Nowadays, so the hesitation of central banks is whether to increase the interest rate in order to control the inflation, or, COVID is still here. Omicron variant, we just heard about this. So maybe to continue to support the economies and, the interest rate to remain low. This may end up with, as said before, too high inflation with slow growth, which is not a healthy combination. But we don't think that this is a main scenario at the moment because we see central banks starting to reduce monetary expansion, a bit increasing interest rate. We just heard Jerome Powell yesterday, chairman of the Fed, saying that they should treat inflation more carefully. So we do think that central banks are aware of this situation, and inflation will be better over time, and the interest rate will remain relatively low, which can support another good year in capital markets. But just an important tip for all investors, I think, because we are talking about black swans. So if you want to duck black swans, duck and swans are relatives, so be diversified, okay? So if you are fully invested in one stock, consider different sector or maybe crypto asset or maybe investment theme. If you're fully invested in one crypto or one asset or one country, so you should consider diversify your portfolio to different asset classes. So in order to reduce the exposure to black swans potentially, so please be diversified. I think that diversification is a very important key factor to success in the investment world of 2022.
Good investors are measured on long horizons. During long horizons, there's always corrections. The way to manage that risk over time is diversification. That's the most important part of a portfolio. And of course, diversifying into relatively uncorrelated assets. So if you're all into Bitcoin, Ethereum, it's not that diversifying that your portfolio, McDonald's and Coca-Cola might be. And while I'll just add to that, that one is, again, this is my view is interest rates are going to stay lower as we look even at 2030. So I think there's a paradigm shift in what interest rates are, how they're used, and what they're used for. Potentially now also seeing negative interest rates with central bank digital money in the coming future too. But inflation in general is very good to some assets. It creates an inflation of real assets. It creates an inflation, whether it's in crypto, obviously, which is a hedge against inflation, whether it's commodities, or whether it's stocks, where you assume people will continue to consume the products of those companies over time, even if prices are going up or there's a devaluing of a currency. So in my view, it's always good to invest in companies that you use their products. So for me, as a father of five, McDonald's and Coca-Cola are definitely part of that.
Yeah, absolutely. Very, very wise words. And again, on diversification, it's so key. I was just this weekend with a bunch of my friends for a stag do, and they don't really invest yet. So I still feel that there is going to be a continuation of this rise of the retail investor. But just explaining to them the importance of diversification, it was like a light bulb moment in their heads, and they suddenly got it. Maybe that's just because I'm a good teacher, I don't know. But moving on to our last poll, and I'm actually quite emotional about this because it is the last poll of the year ahead outlook. So guys, do please make sure you have a vote. I appreciate we still got a month left of the year, but let's put our thinking hats on into 2022. And what asset do you favor the most going into next year? Bonds is the first option, commodities the second, stocks the third, cryptos the fourth, and then currencies, FX, are our last option there. So going into next year, you guys at home, what are you favoring the most going into next year in an ever-changing environment, of course? But I'll leave that up there for another minute or so. I'll just highlight that again on all of your screens. It should pop up right now. Just having a look through the Q&A as well, making a few notes. Really good chat in the Q&A. I really appreciate that, guys. Thank you very much. Let's have a quick look then at the results, just to go over that one more time. What asset do we, or do you favour most going into next year? Bonds, commodities, stocks, cryptos and currencies, and the winner. Well, in my head, I think I know what the winner's going to be. Will I be surprised? Let's have a look.
Going to be top crypto, second stocks, bonds is last.
Yeah, there we go. Exactly that. Crypto, do you know what? A bit closer than I might have thought, but crypto up there 49%, stocks 40%, currencies 1.4, bonds 2.8, commodities coming in third bottom with 5.7 there. Ben, I guess this poll brings on to your section of sort of how to sort of look to invest in this reflationary world as we go into 2022.
Yeah, thanks, Simon, and interesting results. So I just wanted to sort of put some numbers out there, really just to sort of sketch the context of what we're talking about, right? There's a lot of sort of cheap talk about, hyperinflation this and stagflation this, and, a lot of big words being thrown around. But, what are we really looking at next year? We're going to see a growth slowdown. That's not something we should fear, right? We had a dramatic rebound this year. We're going to have a natural slowdown next year, but the growth numbers are still going to be really good. So US GDP growth next year will be something like 4%. It's going to be 6% this year, so that's your slowdown. But that 4% number is close to double your sort of long-term average. So these are still really good growth numbers, despite the slowdown. There's going to be some variability around that depending on the virus, which we talked about earlier. But just remember, economies have become a lot more resilient to every single wave. And so I think we are going to be less locked down next year. More of us are being vaccinated. There are more treatments available. And then on the sort of inflation side of it, in the US, we're living with sort of 6% inflation right now. You've got to go all the way back to, 30, 40 years to find when we've had inflation of these sort of numbers before. The sort of here and now drivers, these sort of clogged up supply chains, these sort of labor markets, which have been sort of somewhat distorted. But I think those pressures are going to somewhat ease next year. But the genie's out of the bottle a little bit. Wages, housing. I mean, these are the sort of big beasts of inflation indices, and those numbers have sort of started to rise. So I think you're going to see somewhat lower inflation next year, and central banks are going to start responding to that. They're going to do it very slowly. They're going to do it from very low levels, but you are going to start seeing central banks very gradually raising interest rates. So that's the sort of reflationary environment that we're sort of talking about. Still strong growth, but definitely more inflation than we've become used to, even though inflation's probably not going to run out of control here. But that's your sort of reflationary environment. So now that we've sort of sketched that scene, what does it mean for the assets? How do we navigate that? If you're looking for the sort of winners, there are two things to look for. So one, you have a bunch of assets that have explicit inflation protection, and two, you have another set of assets which have the power and the wherewithal to at least try and offset some of these inflationary pressures. So what am I talking about there? So firstly, you've got to go all the way back to the 1970s to find a sort of really high inflationary environment. What was the best performing asset class then? It was commodities. These are sort of quote unquote hard assets. They're relatively scarce. They did very well then, and they've actually done, after crypto, commodities have been the second best performing, asset class, so far this year. Bitcoin didn't exist back in the 1970s, obviously, but it's seen really rapid adoption today, and increasingly being seen as an inflation hedge. You have this fixed 21 million coin supply, and this adoption is really beginning to displace some older asset classes, like gold. Equities, I guess the final one I would sort of look at, has historically done okay in inflationary environments or reflationary environments, especially if you've got sort of relatively cheaper valuations within equities. The GDP growth we talked about sort of lifts everybody's earnings and profits, and many of the largest companies have the strong brands, have the ability to raise prices to offset inflation. This protects their profit margin. So those, I think, are the three things to look at, the three asset classes to look at: sort of equities, Bitcoin, and commodities. And obviously, finding who are the losers here. basically it's anyone with sort of fixed interest or no interest. So that's most bonds. There are some inflation protected bonds out there. They're up 5-10% this year, but not very many. So most bonds and obviously cash. Those are the things that just can't keep up and have no protection to this rising or this still reasonably strong inflationary environment.
Yeah, Yoni, I know you've got thoughts on people sort of holding cash and how it's sort of not the most beneficial thing to do. But let's talk 2021 winners and the commodity stocks, cryptos. Do you think, Yoni, that they're going to continue to do well into sort of the next years and years to come?
So I'd say that the main risk is a black swan, right? So if you look at the dot-com bubble or 2008, in some cases, when there is a black swan, those returns and potentially multi-year returns can evaporate very quickly. And sometimes the cause of that is either an unknown or completely coincidental. And history teaches us that sometimes these corrections happen even during a long-term, eventually, bull market. We're still continuing the dot-com of the late 90s. This was all about the technology disruption that we keep on seeing today. We just had a small correction, or not so small, somewhere there in the middle. But I do think, again, on the long horizon, I have no doubt that capital markets are going to achieve better returns than bonds over the next 10 years. I'm a very big believer in crypto as an asset class. Obviously, much higher volatility, much higher risk as it's an unregulated asset class, but nonetheless, it's a very interesting one in all its ranges, Bitcoin obviously being the king of crypto. Regarding commodities, I don't have my own sort of firm view. I think crypto to some extent somewhat stole their retail thunder for sure. They are crypto commodities and people are looking at sort of Bitcoin as digital gold and Ethereum as digital oil, powering the digital economies of the future. There is no doubt that the supply chain mechanics of the last year have supported the traditional commodities growth. But anytime I need to choose between digital and traditional, I'll go with digital, unless I'm looking specifically for that allocation of hedging risk in my portfolio. And that's another thing that I think is worth thinking about. I know I am thinking about that recently, is how can you use shorts? How can you use potentially more complex instruments in thinking about hedging your risks as well? Obviously, there are a lot of very large hedge funds, financial institutions that use these tools also to protect their portfolio from a potential black swan. I think that's something that is always worth exploring if you're sort of looking to dive deeper into the rabbit hole, or just buy NFTs.
Yeah, absolutely. Guys, I've got a question for the audience just quickly, and I want you all to pop your answer in the Q&A. If we fast forward 1 year, end of year 2022 Bitcoin price, I want to see what you guys are thinking. Please get your answers into the Q&A. Next up then, and Gil, I feel like you've got the negative side of this webinar. So we're going to you again here. But the 2021 losers, I guess we can sort of go China, UK travel. What are your thoughts on that? And is it time for a turnaround?
So maybe I'll start with what I think may not turn around next year, and it would be bonds. Ben mentioned this. Bond yields are going up and down. It can continue next year as well. And we do not necessarily think that you're going to lose money investing bonds next year. But if you are counting on this investment to be a leading investment for next year, so I think that don't count on it. I will mention 3 2021 losers, so-called, that may turn around next year, and I will start with China. China equity market had been through a lot this year, and from regulatory restrictions that pushed back the private sector and the policy of no cases of COVID. So we've seen regional lockdowns. But China is such a powerful economy, huge economy, and we should not underestimate the power of China. It can surprise us next year. We think that most of all the bad news are well priced in. And just for the sake of the discussion, you know Alibaba, we know Alibaba, it was traded last year 270, 280. Now the price is 127, valuation P ratio of 18. This is madness, but I don't know if this is the right timing to buy Alibaba or Neo or Tencent or JD. I'm just referring to Chinese equities. So the valuation is attractive. So this is one surprise that we can see next year. Secondly, I will mention UK equities. UK shares are traded 35% lower valuation compared to, this is especially for you guys, Sam and Ben, compared to the global equities. And the dividend yield of the main index, the FTSE 100, is above 4%, which is attractive. And thirdly, I will mention maybe an investment theme, which is travel and tourism. This theme suffered the most from the pandemic, all the lockdowns. So the valuation is relatively low. Earnings are very, very low. But as Ben mentioned before, over time, population is getting more and more protected. So as of now, more than 50% of the population had got already at least one dose of vaccine. So if you have patience and you are buying, I don't know, United Airlines, Boeing, Marriott, Hilton, Carnival, whatever company from travel and tourism, you may find that this could be a surprise for next year, but we need patience and diversification, as we mentioned before.
Or you can travel into the metaverse and buy things like this.
That's true.
Yeah, absolutely. It won't be long before these end-of-year outlooks take place on the metaverse, and we're all in a big stage somewhere, which I can't wait for. Well, fingers crossed. In 12 months' time, we'll be talking about the 2022 winners in the UK. Will be in there for us then, but we'll have to wait 12 months for that. I'm just having a quick look at the Q&A, and well, I'll go through a couple of questions in a moment. But just in regards to the Bitcoin price target for next year, I've seen a range from someone saying 400,000 to quite a few, the majority of three-digit numbers here. The lowest I've got is 22k. So everyone real bullish on things there. However, we've got time for a couple of questions. And Ben, I'll come to you on this one. I know we've talked about this in particular on our weekly Outlook webinars on Mondays, just about the sort of the view of the US dollar and where it sort of goes from here, but also what potentially more US dollar strength could mean for markets.
Yeah, a great question. So we've obviously had, I guess, just under 10% dollar strength against the rest of the world in the last couple of months. That's obviously been boosted by these expectations that the Fed's going to hike rates next year. It's also a sort of safer haven asset, and we're now worrying again about sort of viruses. So all that sort of helped the dollar. I think that strength continues in the short term. To be frank with you, it's difficult to see. Certainly, the Fed, is just continuing to talk more and more about hiking interest rates. And I also think it's worth remembering this dollar move we've seen so far is actually very low or very small in historical context. It's basically the smallest dollar move you've ever seen. Normally, it's sort of 15 to 30%. So, if the dollar does keep rallying, it could have quite a lot further to go. But your second point, who wins and who loses from this? There's always somebody. I mean, I guess the three sort of main assets that normally get hurt by a strong dollar. I mean, the most obvious one is emerging markets. A lot of them are indebted in dollars. It costs, they need more local currency to pay those dollar debts now. So, they definitely get hurt. Secondly, commodities. All commodities are basically priced in dollars. So, basically it needs, again, more local currency to purchase the same amount of commodities. And the other one's US tech. US tech makes about over 60% of its revenues or sales outside of the United States. So the strong dollar definitely makes them less competitive, puts a bit of pressure on their margins, all things equal, which of course they never are. And I guess we've seen that sort of this year, right? So, those are the three sort of losers, so to speak, but the only one that's really been hurt this year has been emerging markets. The other two, commodities and and US tech, I mean, they're some of the best performers this year. So again, it just shows that, there's never only one variable that moves assets. And secondly, if the dollar hadn't been strengthening, sort of tech and commodities just would have done even better than they've already done. But just, finally, I would also just say there are always winners. And I think the winners here are a lot of companies in Europe and Japan. So the flip side of the strong dollar has been a pretty weak euro and a very weak Japanese yen. And a lot of companies, in those economies do the vast majority of their business abroad. So a weaker currency really helps them. It makes them more competitive. It protects their profit margins. So companies like Airbus, like LVMH, like Sony, they actually really like a weaker local currency.
Yeah, for sure.
I have a question. So you have the most sort of macro long-term view of the group here. What are the differences in your view between today and historically when we saw inflation looming, and considering the amount of debt, of government debt around the world, which is unparalleled to anything we've ever seen before? With obviously, I remember when I was a child, people were talking about government deficit, and how can the government get out of deficit. Today, nobody's even expecting a government to not be in deficit. And so the government debt is just going to keep on growing almost by definition of how governments are run now. Isn't increasing then the rates creating a problem because they need to actually now have those rates with their very high debt, and they need to pay for that debt with higher rates, and that sort of just increases the problem? Don't they have also an interest to have lower rates or even negative rates to reduce eventually the burden of a debt on a country?
So it's a great question, because if I'm going to get the numbers right, so global debt to GDP is about over 300%, right? Absolutely staggering number, and it's never been this high. And I think you're absolutely right. So I think there's a number of implications from that. I think one of them is that interest rates can't go up as much as they might have done historically. So if you look back, your average, Fed hiking cycle, when the Fed starts hiking interest rates, they normally hike by maybe 5 percentage points, so 500 basis points on average. This hiking cycle will be less than half that. And I think that's absolutely because if you raise rates much more than that, then you basically cause a recession because there's just so much debt out there. So that's one impact. The other one is actually inflation. One reason I think that governments are, a lot more willing to accept 3, 4, 5% inflation now than they would have been a couple of years ago is one of the easiest ways to reduce that amount of debt is to have some inflation, because that debt is priced in, is in nominal terms, and the, economies increase by inflation. So if you're thinking about it sort of debt to GDP terms that I mentioned, that sort of GDP goes up and that relative debt size comes down. So one of the ways out of this is just have a little bit of inflation. It reduces the amount of debt, and I think that's definitely one of the reasons why central banks are a lot more willing. I mean, remember, the European Central Bank and the Fed have both changed their inflation targets in the last 18 months to tolerate more inflation. And I think this is one reason.
Fantastic. Yeah, well, speaking of the Fed, they meet in pretty much 2 weeks to the day on the 15th of December. And of course, you've got non-farm payrolls out this Friday, 1:30 p.m. UK time for any intraday traders out there. Last question, and I know we've sort of talked about crypto throughout this session. We've had a whole end of year ahead outlook on it as well. But Yoni, for you, what else are you sort of watching for 2022 in that crypto space? I know you touched upon the metaverse and NFTs, but is there something in particular that we need to be aware of?
Well, I think there's still, so I think right now there is high level of confidence and clarity of Bitcoin is king in the hedge against inflation play. But we do see more and more institutional investors, hedge funds, the largest family offices in the world, who are now diversifying into crypto. Some of them with not with a sort of what you would consider a reasonable risk asset. No, not with 2% or 5%. Some of them are doing that with 20% to 40%. I even heard a couple of famous hedge funds talking about 80% diversification into this new asset class. So you are seeing large multi-billion-dollar institutional investors, family offices, hedge funds going into that asset class, looking for what has been significant, outsized, crazy, not of this world returns in some of those assets. So you have the hedge against inflation of Bitcoin. You have another trend which will continue, which is generally blockchains, smart contracts, the competition with Ethereum as who's going to capture that market, where the underlying market is just full of innovation of creators from now. Two parts, whether it's creators, whether they're financial innovators in decentralized finance. And I have to say, as a computer scientist, the amount of innovation that we're seeing in DeFi and the speed of innovation we're seeing in DeFi is probably 5 to 10 times faster than fintech. Fintech is 5 to 10 times faster, at least, than traditional finance, than banks. And suddenly you're seeing something that's moving even faster because of its decentralized nature, because of also the level of risk that these projects can take, right? So if you're a programmer now somewhere around the world and you're launching just 200 lines of code, you haven't necessarily raised money, your customers are all using the blockchain, there's no regulation, so the much higher risk for investors, but the level of innovation of what we're seeing there is mind-blowing. And I think today there's more than $100 billion already staked in various types of DeFi protocols. So the financial innovation, which obviously I've been a fan of since I was very young, is just accelerating right now into basically terms that some traditional finance people can't really fathom what's happening, right? You need computer scientists to explain what a flash loan is. A flash loan is a loan that you can take for 8 seconds and do something with it on the blockchain. You need to explain that to someone who doesn't know what blockchain is. It's extremely hard. But the fact that you can take now a $10 million loan on the internet for 8 seconds and do something with it is quite interesting. And the other part which I see, which is super fascinating, it's also fun to watch, is the space where we're looking not at financial creators and developers, but at art. The amount of projects coming out to the market as NFTs over the past 12 months, and I believe that will continue over the next 12 months and definitely over the next 10 years, is really mind-boggling. All of the people I know that have historically been artists, whether it's musicians, painters, just creative people that were struggling to find their place in the new economy, are now all in very high level demand. Every single artist I know in the various parts of art and culture are now figuring out how can we expose our art in basically what we call the metaverse, right? So if I'm an artist in Tel Aviv or in India or in Asia, suddenly my audience grew from the various art collectors I have around me or the various art community and local culture I have to suddenly everybody on the internet. And that is being monetized by NFTs, which I think are an amazing sort of digitization of consumer assets. If we were talking before about blockchain and digitizing finance, NFTs represent digitizing just any type of goods and services, really tokenizing the entire economy. And the opportunity there is infinite. If we think about anything from art to wine to music to culture to rights to future revenues, anything can be tokenized, and everything will be tokenized eventually and potentially traded over the internet, which is great news to us to enable that eventually. But I think also the opportunities there are vast, and it's in the intersection now of culture, and technology, which makes it interesting. And that is, I think, what when people talk about the metaverse, it is connecting people from different places around the world into a certain culture and a certain, whether it's certain creators that generate that space to them. And I think that's a fascinating world that we'll see getting more and more mass adoption in 2022 and beyond.
Yeah, for sure, for sure. I was just actually, while you were talking about that in the Q&A, Joseph was saying pretty much the, similar kind of things, and he was saying he's excited for NFTs as a creative too, as he's in filmmaking and photography and wants to monetize his work in the metaverse. And guys, there's been some unbelievably great questions in the Q&A. Unfortunately, we've come to the end of the show, but do not fear, those questions, we do look into them, and we can put webinars on individual questions that you have answered. We can talk about it on our podcast as well. Give us a quick why in the chat if you want these more often. We'd be more than happy to start doing these as a regular. But hopefully you have all enjoyed the year ahead outlooks. I know we have, and thank you very much for the team for helping to produce this. It's been an absolute pleasure to host this. Yoni, Ben, Gil, thank you very much for joining.
Thank you very much, Sam.
Thank you, Sam, and thank you everyone for being part of this. Thank you.
Awesome. Thank you very much, guys, and enjoy the rest of your day. We've got crypto webinar in 45 minutes. Head over to the etoro Academy to watch all of the year ahead webinars on demand whenever you want. And of course, on the Academy, you can sign up for the weekly outlook that Ben and I do every Monday as well, 1 p.m. UK time. Thank you very much, guys, and have a great rest of your day.